Big news for the housing market last week, and I would be remiss if we didn't talk about it. The Federal Reserve met last week and announced a quarter-point benchmark rate cut, the first rate cut in 9 months. I've got some key takeaways to discuss with you and what it could mean for the housing market, as well as buyers and sellers here in Iowa City and beyond. Hi, Emily Farber here, your favorite Iowa YouTubing realtor. I make content all about Iowa and real estate to help people just like you make smart decisions. All right, what about this Fed move? Here's the short and sweet of it. The Fed lowered its benchmark interest rate by 1/4 point, the first cut of 2025. Now, I need to make a note here to point out that the amount that the Fed changes rates is not the same amount by which mortgage rates will change. It's correlated, but it's not direct. The federal funds rate indirectly impacts mortgage rates because the Fed sets the cost of short-term borrowing for banks, which then affects the broader lending market. Now, this rate cut is big news because the housing market has been on the struggle bus. There has not been that much real estate activity this year because buyers have been absolutely beat down by high prices and high interest rates. Look at this graph from Housing Wire. It shows that inventory is back up. The black line is here in 2025, but buyers are largely missing from the equation. Redfin data shows that there were 506,000 more homes for sale in August than there were buyers to buy them. The number of active buyers in the U.S. housing market fell to 1.4 million, the lowest level in records dating back to 2013, aside from the start of the pandemic when everybody basically went into hiding. There was broad support for this rate cut, although some policymakers thought that it is too little and came too late. Many are predicting that the Fed will cut rates at least 2 more times this year, reflective of growing concerns over the U.S. job market. So, what are the real estate impacts? Mortgage rates on a national level have been showing signs of easing since around July. The average 30-year fixed rate dropped to 6.39 right before the Fed announcement, the lowest it has been in a year. Local rates were even better. A recent rate sheet from a local bank here where I work quoted 5.625. But here's something that's going to seem a little counterintuitive. Often mortgage rates drop in advance of expected Fed rate drop announcements. And then when the drop actually happens, the rates actually tick back up a little. The news of the potential drop in rates triggered a surge in refinancing applications, which jumped 57.7% nationally the week before the Fed's official announcement. Realistically, the downward movement that people want to see in mortgage rates was already baked in to the rates at that point. While the Fed's news creates a certain buzz and optimism, many people in the industry don't expect rates to fall much below where they currently are unless this rate cut turns into a series of rate cuts that play out in October and December. Personally, here, boots on the ground, I've noticed an uptick in the number of showing requests on listings I have that have been sitting. And I held an open house this weekend on a new listing of mine, and it was slammed with people. Now, was it busy because buyers suddenly emerged from their hidey holes, or was that open house slammed because this house was a real looker? I don't know. What do you think? Here's a couple pictures. Tell me your comments down below. I'm leaning towards thinking the open house was slammed because of this particular property and the attractiveness of it. I'm going to call this one off as a unique situation. Okay, here's what to keep your eye on. Look out for future rate cuts. Many people are predicting additional rate cuts in October and December. That could push mortgage rates into the low 6s or even high 5% range, which would be the lowest they've been since the spring of 2022. But here's a big red flag. If rates drop and buyers flood back into the market, Demand is going to push prices up. That means waiting for a slightly lower rate might not actually help your budget if home prices are rising at the same time. Right now, buyers have negotiation power that we haven't seen in years. Inspection contingencies, seller credits, and price flexibility. If the crowd comes rushing back in, those options will disappear. Remember the saying, pigs get fat, hogs get slaughtered. Hogs get slaughtered. Don't wait so long for the perfect conditions that you miss out entirely. Now, before you get offended and think that I am personally calling you a pig or a hog, rest assured I am not. What I am saying is that if you are waiting for the market to become better than what it already is, you may be walking yourself directly into the slaughter pen. We are currently in one of the best buyer markets that I have seen in years. I'm able to negotiate for my buyer clients in a way that we just haven't been able to. And I would hate to see you miss out on the opportunities at hand when all the other buyers get a clue and start home shopping. So sellers, what does this mean for you? Well, you benefit if buyer activity increases because those buyers are going to create demand and they are going to feel urgency. Demand and urgency always works in your favor. But pricing mindfully will be the key to your success. You can't just stick any old price on a listing and expect it to sell. Affordability is still a major issue. Household budgets are stretched, not just by housing, but by everything. Insurance, utilities, groceries, you name it. Price strategically, present your home well, and you will capture those buyers who are re-entering the market with fresh optimism and are ready to make a home purchase. What do you think? Will interest rates easing off a little actually make a difference in your plans? Are you a hopeful home buyer out there looking to make a move into the real estate market? Or are you a home owner with plans to sell, but you've been worried about how the market has just been languishing? I would love it if you would tell me about it down in the comments. Hey, it's been fun, and I'll catch you later.